Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Monday, April 28th, 2014. Markets are down, although the Dow is actually a little bit stronger, peaking around the flat line right now. The biggest loser, of course, is the NASDAQ. Technology continues to be the weakest index we have seen in quite some time. And again, if you look at the IWM, the Russell as well, that is also leading to the downside. So again, just to recap, weakness in higher risk beta plays like small caps and technology, strength in the Dow old school stocks, and the S&P is just slightly negative, down about 5 points right now. Now you can see the markets from the opening highs. We initially opened higher. You saw some selling, then a rally to new highs, and then ultimately the markets had this big sell-off. A lot of that was led by the U.S. dollar yen drop, which continues to be a major influence on the markets. But there's still some concern over earnings lately. Whether or not the Fed this week is going to cut another $10 billion, and that's something you want to pay attention to. Wednesday, the Federal Reserve will report their FOMC statement from the two-day meeting that begins on Tuesday, and that could be a major driving force to the next move in the markets. So right now, again, my projections for the next couple days will be a majority of flatlining. So I'm expecting, again, neutralish, maybe a little weakness into that Fed decision on Wednesday. And I think that's kind of what we're seeing today. Again, Spiders, which is the S&P 500 tracking ETF, right now trading down about 37 cents on the day, which is not much. As I said, just a minor amount to the downside. And I expect kind of the same type of action tomorrow. I think technology could remain weak for the next day or two, and then we'll see what the Fed says on Wednesday. We also have some major jobs data this week. Friday, the non-farm payrolls and the unemployment report will be out. And also on Wednesday, we have the final GDP number that will be released, which will also be significant. A lot of these could shape whether or not the Federal Reserve ends up cutting another $10 billion of stimulus out of the market. Just a little side note on the trading today, if you're looking here at the intraday chart, so this is today's action. Each candle is 10 minutes of market action. All right, now I want you just to pay attention to the support areas. So see this area from Friday's action right here? Notice how we opened higher, we sold off right into gap fill 20 MA. We then bounced, we went almost to gap fill right here, right? Which is obvious resistance. And then you started to see some selling to the downside. And notice how the selling came down to this consolidation bounce level on Friday, the lows from Friday. There's where we bounced, and then you broke through it, went down to this next support level, and then look at where you bounced back to. So just a little bit of a trade lesson, if you will. Please notice how this was support on Friday, and you got a small bounce on it off of it today. Then you broke lower, negating that support. What does broken support become? It becomes resistance. Notice how on this bounce, you go right into that level, and that's where you start to stall out. So remember, resistance becomes support, support becomes resistance when it gets broken. Very important factor to monitor there, folks. For those of you at home, those of you watching around the world, it's a very important thing to know when resistance and support will be resistance or support, and when it switches. All right, couple other things to go over here. Some big drops on stocks here. Take a look at Netflix today. Netflix down over $16 off the lows. Baidu taking a beating, down $12. And you can see these are all tech names with high betas. Tech names with high betas, absolutely. Okay? And also, if you want to go to Priceline, look at Priceline today. Priceline out off of its lows, but I want to show you this because this just shows you how awesome the charts are. Look at this low right here and how it matches up with the 200. Look, if we put a trend line right there, perfect area of support, and look at the bounce you've gotten off that low. Right now, folks, get this, $22 bounce on Priceline off that low, off that double bottom and 200 moving average. So things like this are really the key here. This is what you look for. This is how you trade. All right? And again, if you know what you're doing, there's a lot of money to be made here in this market environment. All right, couple stock sectors that are weak today. Take a look at the financials. J.P. Morgan Chase is down 60 cents, 1% on the day. Goldman Sachs is down over $2.70 right now. That's 1.7%. And look at Bank of America today, guys, getting hammered, down 6.2%. They came out this morning and said they had miscalculated on their reserves, and initially they had declared an increase in dividend. They're saying they can't do that anymore because they need to put money away for reserves and for loan losses and so forth. That's a big deal there. Because again, this was based off the stress test that the Fed did, and obviously Bank of America either categorized it in a sloppy manner and did bad calculations, or they're finding out that they have more losses on the books than anyone was aware of. I don't know which one it is, but it does warrant us keeping track of the financials and the overall market in the coming days and coming weeks. All right. Some stocks that are leading today, anything that's old school tech is doing pretty well. If you look at IBM, for instance, take a look at IBM, right? I think that's about as old school tech as you can have. And IBM is rallying $3.65 or so, almost 2%. Also, take a look at Chevron today. Chevron's up $1.25, actually into a little bit of resistance double top up here on the charts, but nonetheless having a good day. Exxon, also a nice little update, small update, but an update nonetheless. I mean, you're seeing a lot of these stocks just continue to move, and the Dow is actually inching up a little bit right now. Dow is back up 31 points now as we're continuing to do this video. Right now, S&P down 1 point. So we've seen a nice little bounce on the markets just since I started this video. And the NASDAQ is down 21 still, but that's well off its lows. Believe it or not, at the lows, I think the NASDAQ was down something like 70 points. I mean, that's a big-time bounce off these lows. All right. Twitter today, down $1.44. Please notice how Twitter took out this recent double bottom intraday, but has now bounced back above it. Plus, you have this support right here, which was just kissed. Very good level here. We broke the $40 even number, which is a major even number on Twitter as well. Facebook today, guys, take a look at Facebook. Good sell-off on Facebook, although, again, it's bouncing off its lows. Gap fill right here, and the 200 moving average right below it will be a major support area for this stock. So there's a lot of interesting things going on, a lot of potential trades. I want to show you another great trade here that you could have taken if you're in the Money Stocks member and you understand the PPT methodology. See this gap right in here and see this little pivot high? Take your cursor and put a line right there. Look at that. Perfect gap fill on the charts. So these types of things, you know, if you know what you're doing, I mean, right now Pandora's bounced already 80 cents off the lows. I mean, that's a big time bounce on a $20 stock. And all you had to do was notice that this gap fill was right here and buy it right there. Gap fill, one of the easiest plays in the world to play. Really is. Okay? So we'll again continue to focus on this, but just to go back to the SPY, we should be able to see a little bit of a push up here based off what we're seeing. Yeah, Spider's only down 3 cents now, so we're basically back to the green side. Look at that push up. So you're into the 50, and you're still into resistance here on the SPY intraday. But again, if we can break above that and close in this upper ranges, then you actually could free this thing for a further upside. But again, just to note here a couple little things. Markets, I'm expecting neutralish action today and tomorrow. You know, maybe a little weakness in the tech sector because I think that's where most people are scared to be invested in. So that could just continue to be a little on the weaker side like we're seeing today. But again, neutralish action expected for the Dow and the S&P. And then on Wednesday, we get GDP. We get the ADP private sector jobs numbers. We get the Federal Reserve announcement. That's going to be your day. That is going to be your day where you should see a big move coming into play. And I am expecting a big move one way or the other. All right, believe it or not, I'm not out of the camp thinking it could be an up move either. I don't know yet. I'm going to watch how the market trades into Wednesday and then make my determination. But be aware that it could go either way. It really could. All right, just a quick look at what we're seeing here on the dollar, the UUP, which is the dollar ETF, down 2 pennies on the ETF here, and that's nothing. It's basically a flat day on the dollar. GLD, which is gold, down 36 cents, although off its lows. Silver, let's take a look at SLV. Silver's basically flat to slightly lower as well, just like gold is, and the USO, which is oil trading flat to positive here, up 4 cents on the day. All right, guys, I'm going to step aside. Come join us at InTheMoneyStocks.com. 175% net return for Research Center members if they took every play this year. Again, even if you only put 10% of your portfolio in each position, you still made a whopping close to 18% this year alone. And we're only about 3.5 months, 4 months into the trading day. So pretty spectacular stuff here, guys. And again, I encourage you to take the 7-day free trial to the Research Center here at InTheMoneyStocks.com.